Hello again, everybody. It's Harry Boxer, the Technical Trader at TechTrader.com. It's Saturday, November the 5th. This is the weekend webinar, an eventful week. Again, the market's got up to a key resistance level. You can see the S&P 500 at about the 39 level. 3 days unable to get through, and then a plunge, especially on Wednesday, follow through Friday, bounce on, follow through Thursday, bounce Friday off what looks like a possible trend line, at least the way it's developing now. And the reason why I draw it off of here, it's usually, and I've been taught by Tom DeMarco, a brilliant analyst, that you never draw a trend line off a spike low. You usually try to first pull back low, and look how that turns out to be an accurate channel. So right now I'm looking for 4,000, maybe 4,100, 40,000, 4,090, which is in line with what my buddy Avi thinks. But more importantly, if Thursday's low is taken out, the only level of support before we retest the lows on the S&P is 36.4550. So keep those numbers in mind. The S&P goes under 36.47 to be exact. We have a possible plunge to 34.95, 3,500, and then we're looking at 33.80. So on the upside, I'm much more optimistic, of course, of retests. But when you look back at the entire pattern, it's a 1, 2, 3, 4, 5 wave decline with a spike low and a reversal. That's the reason why I think the market got oversold enough psychologically and technically to create an opportunity on the upside. And yes, the S&P did bounce from 34.91, 3,900 range, 39.11. About a 400-point run, quite a bit. And then the pullback. So if it's a 1, 2, then I'm looking for 3, 4, and 5, right? But if it's simply a ongoing bear market rally, and perhaps even you can look at it this way: a rising wedge that failed already, and all it did was snap back. That's why I think Monday's important. If Monday takes out the Thursday low of 36.98, 3,700, we have a problem technically. That's my opinion. Well, we shall see where we stand. And we'll know a lot more by the close on Monday, in my opinion. What about the NASDAQ 100? It looks even worse. The pullback almost created a double bottom. And of course, the rising channel has been broken. And notice that this rally and this rally are almost exactly the same point along with where this bounce took place. So in essence, key resistance, 11,665 on the NDX. And now your key support is right there at about 10,000. I think it's 490, 440. So you get below 10,440, and I think the plunge is underway, and it could be ugly. So you're not out of the woods yet. Do I think the market can rally from here? Of course. If it gets to 11.6, 11.7 zone, I think we're on our way to 12.1 or maybe even 12.6. Should be a very interesting time going forward. But the market doesn't look like it's out of the woods just yet. And this may only be a 1, 2, 3. We can come down to that. Under 10,000 wouldn't shock me either, especially in a spike plunge low. And this is, again, wave 1, 2, 3, and 4. If 5 is at least a 1, 2, 3 affair, and it could be 4 and 5, we could see 9,000 before not too long. Wouldn't be a shocker, folks. What about the small caps? Not faring much better? Oh, yeah, they are actually. You take a look at this rising pattern, the pullback is much more muted than the S&P 500 and NDX. At this point, it looks like a rising channel there. I would have to say, though, the pullback low, once again, is going to be important. We do not want Thursday's low taken out. If you take out 174, you might see 167.8, and you could see a retest of the triple bottom at 162.50. Longer term picture, it looks like it broke out and retested and then bounced. But if you take this pattern this way, you can see, unless we get up above 190, it's not technically a breakout. What about transportation? A 1, 2, 3, 4, 5, and a bounce. The bounce was a little better than the other indices in that it looked like a little bit stronger. The angle a little sharper. If in fact that's your angle, your next target is 14.2. And 14.250 in that zone is the juxtaposition of the top of this channel, lateral price resistance, declining tops line. So if we get a pop through 14.34 zone on the transportation index, I think it indicates a breakout and a move to at least 15.57 zone or more. We'll just have to see what we get. I will say Thursday, was unique because the markets were mostly down, rallied on Friday, but there was a positive divergence on the transportation index, which is usually very bullish, Dow theory, that indicates any breakout now above the, again, 13.8, 13.7, 40, 50 would, I think, be bullish for the market. And on the short side, always giving you both scenarios. If we crack to the downside under 12.9, under there, we could roll over and test the lows or worse on a longer term basis down to 11.3 or 4. That'd be a disaster. So that's a look at the industry. Let's look at the technicals. The McClellan oscillator, which had gone to multi-year highs, believe it or not. This is the highest level achieved since 2019, I think. But let me see here. We reached 241 here and 238 there. So pretty much in the same level that we reached the plunge low in March of 20, indicating obviously an overbought market, which did get taken down hard back to 0. And then the bounce on Friday took it back up to almost 100, up 43 points, or a big pop on Friday for the oscillator itself. Now that can remain up in that territory like it did here for weeks at a time. And it wouldn't shock me if it went higher. But again, I'm going to just say this over and over until it gets in your head. At the beginning of every major move, the oscillator will go quickly overbought. That's a good thing. When the market comes down, because the oscillator is comprised of advanced declines and up-down volume, which are usually 5, 10, 8, 12 to 1 or more, you'll get the oscillator spike. But then when the rally continues on a lower level of technicals, meaning that the advanced declines are only 2 or 3 to 1 positive versus 10 or 12, then of course the oscillator will come down while the market goes up. And that's what you really want to see, if we can hang in this area somewhere between, say, 50 and 100, 150 in that zone for a bit, like it did along in here. The percentage of stocks above their 40-day moving average, something I follow, shows, there you go, shows that we went from around 7.5%, 8%, which means that 92, 93% of stocks at the September low were below their 40, and now almost 3 out of 5 are above their 40. Again, overbought, oversold. Yeah, I would say it's a little overbought, but it can stay up here for a while. Just like back in here, where it dropped back and then kept going, or any of these areas where they drop and pop. Look, at some point, the thrust is important to know that it will alleviate itself by pulling back while the market still goes higher. But the percentage of stock should increase. The VIX never got to a level that was really what I would call spike high, because we've gotten into a level of where I consider the market oversold. And that's why this bounced from the mid 30s, or dropped from the mid 30s to the mid 20s, and is at the lowest level we've seen in 2 months right now. That's the VIX indicator. So that's the look at the technicals. I look at the composite, and you'll see an ugly picture, but a nice bounce on Friday. In the case of Apple, Apple got down even slightly below the level. We're right at it. Let's take a look at this low. Back in mid-October, a month ago, 134.37. Friday's low, 134.38. How about that? Within 1 cent, or 1 cent of the low, and then it bounced to 138. About 4 points. Still closed negatively, and is that a lot of work to do up in that 144.5 zone. We'll see what happens. If Apple breaks 134.5, I could easily see maybe even 129.30. Let's see, 129 to 129.30 zone would be the place where I would look for key long-term support on Apple. Break of that, and we're in a major bear market. Look, when you look at the market, we've really been down since last November. Here, we've been in a bear market since this level. The exact high was November 22nd, 21. We're a year later, and we've gone from 16.765 to a low of 10,440, 6,350 points. Massive drop in a 1, 2, 3, 4, 5 wave decline. My only problem with that, like we did here, where it looked like that was leg 2, it bounced and then made a lower low before the bigger rally. You might have to do that before we get a bigger rally. But I do think a year-end rally is in store. I'm going to be very interested to see what happens on November the 12th, from what I'm hearing, where Trump announces his candidacy, and if that occurs, it could be a boost to the market, possibly. We'll see. All right, so back to where we were. Apple and now Amazon, which looks really bad. But when you look at the long-term picture on Amazon, it's had a 1, 2, 3, 4, 5 wave decline, and it's near 3-year lows. The lowest level reached here was, I'd say, 2.5 years ago, March the 16th of 20, when the market crashed and hit its low. We're almost there again. Now that low on Amazon was down around 84.5. Didn't get anywhere near that yet, but we did get to 88. So in a minor bounce, what I consider kind of feeble at that for Amazon, we need to get this. This looks like a selling climax with big volume on the downside, but notice here when that happened, we went lower. It's possible to go lower into the mid 80s, even low 80s, and then see a tremendous rally back towards the low to mid 90s and maybe even back to 103.4, something like that. And you can see that it's a mini waves down, 1, 2, 3, 4, 5 down and 1 up, and then another. This could be a 3-wave corrective, or we get a bounce 4 and we go lower to 5, and that's the problem with all of these. They don't seem quite complete, but they're awfully close. Google's acting a little better of late, on Friday anyway, but not of late, I should say. Friday, look at a 1-minute chart on Friday on Google. Pretty strong stuff, and it was up 3 in a market that was pretty ugly in the morning. So for now, Google's completed a 1, 2, 3, 4, 5 wave decline, it looks like. And more importantly, when you measure it this way, always draw your lines in a parallel level if you can, off of key support lows. Take a look where we are. This is why I'm not, at this point in the market, even though there may be some more downside, being aggressive or initiating new shorts. As a matter of fact, when you see the charts I'm going to show you, you'll see why many stocks have turned around and moved up again. Yes, they had a difficult week, like the market really took some of them down, but keep an eye on Google long for a move back to, I would think, at least about 90, 92, maybe as high as 96, 97, before it pulls back again. So Google could be interesting. And again, I think I mentioned on Friday that the options on some of these down at these levels, long options, may be real intriguing. So looking at Microsoft, nice reversal. Look at Microsoft, almost exactly hit this declining top line connecting these 4 lows, lateral price support at these lows and this gap in there. Now there's a possibility if the market really tanks down a little bit further, we can go under 200. That would be awfully juicy, but we do have a 1, 2, 3. And if we get a 4, we may get a 5th. The only problem is that would take a break of the bottom of the channels, and sometimes in bear markets you get that spike down that blows the market through the bottoms of the channels and then reverses. So again, I think we're awful close to important lows, but I can't say I can commit to that yet, not until certain things happen. NVIDIA had a good day and a good week. Matter of fact, the last 2 weeks since this reversal low at 108, NVIDIA has gone from 108 to 142, 34-point gain, and it's right back up to a key level right there at this low and these highs that indicate any further upside. We should test 150, and through that you got a breakout and could be up to 175 or 190. But for now, optimistically looking at NVIDIA as a major low potentially in place. 1, 2, 3, 4, 5 waves down. Netflix had a tough week, and Friday was bad, and it came down and filled the gap. So that would be an important hold down here. I'd have to say near 250. The low was 255. We closed 261. So a nice bounce off the low, but a negative day, and certainly coming off the high, connecting this level. It appears that Netflix is back to mid-channel and near the 50-day moving average, which is about 245. So 245.50 support. Right now we're 261. Again, even if we do bounce, we may make some lower lows on some of these, but those would be great buying opportunities in my humble opinion. Meta is about as ugly as it gets. If you remember, I gave you long-term projections at 89.90. We reached 88.41. And, you know, it can't get much worse for a stock to go from 365 to 88. And it did it in a year, well, a year and a half. Looking at the long-term chart, this is below everything, going all the way back to 2015. And then, so the next target would have to be 70, believe it or not. Now, if that happens, you got a market blowout. That's a major low on Facebook, Meta. Tesla, when I look at this again, I see a 1, 2, 3, 4, 5. But again, the fifth wave may not be completed until a test of 180 or even 165 takes place. So I'm not sure that this isn't a 1, 2, which already started the wave 3, and that's a bearish engulfing bar on top of it. If Tesla takes out 198, you need to stay short for a move to 180 for starters. So basically, you look at the NASDAQ 100 generals. There's others, but those are the ones I want to cover today. Let's look at some more of the ETFs that we follow closely. Oils, despite everything, oil continues to go higher. As a matter of fact, what I see as a coil or wedge and a declining tops line, after a 1, 2, 3, 4, 5 wave decline, has us back up with a big day on Friday up 351 or 5%, highest close in 2 months of the USO. But there is ahead 79 to 80 and a half in that area, a resistance level that if it is taken out, off we go. If it fails somewhere in this range, there's always a possibility that this is one big wedge and we fail and go lower. Careful with oil, but play it alongside until otherwise noted. Take a look at the GUSH. It's up against resistance, but appears to be breaking out. This was the $200 range that we hit. 202 was the highest level we've seen since June, 5 months. So a breakout here, and there's a solid chance we could test the highs in the 250 range. So watch for that to be a spike blow off like it did. It was up here. I would also keep close tabs on support. And I would say right now, if you're in GUSH, the key level is not to let this go below 169.5, 170. Then things change. That's oil. Here's gas. The boil may have come out of a declining tops line here. It was a steep one. It also may be a bear flag. Until Friday was good, real good, up 17%. Mine was one of the biggest I've seen in an update ever. But I'm not comfortable with the pattern and the way it's constructed, and it's at the 21-day moving average. So we got to follow through. And if we do, watch for boil to make a run towards 50 and even 58 if this market gets hot on nat gas. The other side, KOLD, is going the opposite direction after breaking out, back to support. So careful in that group. Gold, here's the GDX. Big day on Friday, one of the biggest I've ever seen. If you look at the bar on GDX, we went up 2 3/4. Now that's a change of 11%. Very big for an ETF, particularly in gold. And you can see how this left shoulder and this shoulder here was forming an inverse head and shoulders before the retest and bounce. Now we've got to get this up above here. If you see 25.5, 6 taken out, we're probably going to see 27 3/4, 28 3/4, and 30. But we have work to do. It appears that declining top sign may be taken out, but we need to follow through. NUGT, very similar, bouncing off a triple bottom area, spiking up 21%. But you can see, I'm not going to be enamored or bullish on this on the group just yet until I see 29 3/4 taken out. Then you're on your way to 35, 40, etc. What about silver? Well, AGQ really had a good day Friday and popped 14%. It did it on almost 2 million shares, which is good volume. The declining top sign may or may not have been taken out. If I draw it this way, it is. If I draw it that way, it isn't yet. So the evidence would be above 26. Then we're on our way to much higher levels in silver, but we may be forming a bottoming pattern in here. We shall see. A little AG in that group, you can see the basis formed on that. And move across 930 would be very bullish for AG. And there's way others. Pan American had a very tough day due to a merger, and it dropped down, but came back. It dropped all the way down, as a matter of fact, to 1384 and finished at 1490, a nice point off the low. We'll have to see. I wouldn't be bullish on Pan American until I see it take out 17.5. Then you're on your way to higher levels. Again, 1, 2, 3, 4, 5 waves down in the base, with that being extraordinary because of a merger. A takeover, actually, on their part. We'll see. So that concludes my look at commodities. There's a bunch of others, but let's move on. I have stocks to talk about, long and short. On the long side, ABCL, which I liked here and put a swing on it, did very well and spiked to my target. It came down. It broke out from the flag and popped again. Right now, it's at a resistance level that if it should get through, and notice 4 days in a row unable to get through 1245.50. If we do, we're looking at 14.5 and 16.5. ADTN got whacked on Friday, I think, on earnings report, 22.41 to 19.85, but it did bounce to $1.75 to finish 21.60, down 72 cents. Let's keep an eye on that one. Your resistance is around 23. If it does go, the target would be a retest of the 25 area. AEHR. It's certainly a stock that we've liked a long time. Major winner for us there. Major winner for us there. And then it broke out again, popped and retested, and then ran up. Nice move recently from under 14 to over 23, and now the pullback. Pullback has gotten it right back to the gap and price support. So stop on this one under 17.5. Targets at 23.4, 26, and then high 20s, low 30s. APA, oil's still strong. Look at our favorite APA. Folks, as you know, I've been following the stock since it broke out here in the 6 range, and I put a swing on it. It's been extraordinary, going from 6 to 50 some odd. Pull back down, breaking back out again. And should this get above 50, 50.5, channel top says this might move all the way into the low, mid to high 60s even. Something to keep an eye on, but it might be a double top. You got to be careful up here. Make sure you're playing the oils with stops. ARRY, almost a perfect inverse head and shoulder and breakout. We put a swing on it and ran sharply to the target and pulled back down. I'm looking at this carefully, and I want you guys to just keep it on your list. Move above 1935.40, then you're on your way to 22.5, 27, etc. In the gold sector, AU is a stock to keep in mind. It's, I think, a good mover when it moves. You can see Friday was a big day up, 14%, $1.84, and it traded 6.3 million, which is the biggest volume since March. So perhaps something more significant underway in golds, as many of them are acting like they want to break out. Right at the breakout point here. AXSM, AXSM, what a stock it's been. A beautiful breakaway move. We put a swing on it and ran up to target number 1 and 2 and 3, and then pulled down. Broke out again. We got a swing on it again, I believe. I'll have to double check. But either way, anything over 62, we're looking at 70, 71 and above. Boil. Well, we talked about Boil earlier. It's got to make a move above here, otherwise it could be considered as a bear flag. If you look at it this way, just want to point this out as a possibility. This could be a trap if it fails here. Careful on this one. BTU, a nice couple of days Thursday, and then pulled back on Friday, came back again. So what we're watching for, can this break out over 28.65? Then we're looking at 33.34. CECE has been unusual. During the whole market, it barely came down at all. It made a new multi-year, if not all-time high. Not all-time, but it was the highest in about 7 years. It looks like it could trend higher, mid-channel target 14, upper channel target 17.5. Great chart. On a short-term basis, stop is under 10.5 3/4. CEIX coal. We've been looking at this thing for 2 years, and this is an amazing stock. 3 3/4 into the high 70s. I think it tagged 80, 79.17. It's pulled back in the last couple months and it's formed a coil. Friday it popped a bit. Keep an eye on this one for a move back to 78 and eventually 95, 98. CGC, I'm a big believer that marijuana group has bottomed. July low, 3 months later, October low, and then a big spike up and now a wedge. If CGC takes out 389 and then follows through 4th 2022, you're on your way to a much higher level. Keep an eye on that one, that's a swing. CMBM in the telecom group, breakaway gap with a nice pop, 25% on Friday, with the best volume on an update that we've seen in more than a year, telling me there's a possibility we get a follow through, and if so, I would look for 2 levels, a test of 27.5 and 29.5. CROX, as you know, one of my favorite longs, and then shorts. CROX was one of our best shorts this year, from December of 21, 135. The stock made it down to 47. After running up and platforming for months, Friday was a big breakout day for it. See it? And it closed above everything. Now I'm thinking the stock has a chance of being 100, 110 again. DGII, an example of excellent relative technical strength. Now it's pulled back down and reversed Friday. It's in a beautiful channel. I think that low 40s is a possibility. DXCM breaks out of a base a month ago, pulls back and tests the moving averages and trend line, and it pops up again sharply, going to an angle that looks like that now. So it's a 1, 2, 3, 4 is underway, looking for 5 to 134. EDAP breaks out of a base, pulls back, tests, bounces sharply. Big week for it last week as it ran from about 9 to 10 3/4, closed 1050. It's the highest level we've seen it close at. It's almost to the high of 21, early 21, almost a 2-year high. Next target 12, 12.25. In the educational sector for China, EDU, a big dip and a big rip, formed a wedge and then popped again. Keep an eye on it. If it gets above 30, it's up to the races, 33, 35, whatever. ENSV, a low-priced oil and gas equipment services stock that broke out, wedge, popped and wedged again. I can see 3.5 and 4 3/4 going forward. EPAL, big spikes here, here, and again here. Recently it popped on lower volume and backed off, but I have a strong technical feeling and fundamental look on this one. I think we can just hold it here without breaking down. They may take it under 3 if they do it. Watch for 265 as an entry up. However, any move forward with volume should test and take out 4.5 and run up to 5 3/4 and maybe 6.5. That's my take. ERX in the oil sector, oil gas bull double. Beautiful chart approaching the June high, which was a multi-year high. So there may be some resistance up here, but it's a beautiful chart. EXAS broke out on Friday, maybe out of an inverse head and shoulders with volume. Strong report, and it took out the declining top line. Something to watch. Put this on your radar. Keep your eyes on 43 as the target near term. In the medium term, 49.50. EXTR has been a powerhouse since the June low when it was trading at 8.5. Currently 10 points higher. High on Friday, 1844. I'd love to see it back in fill and set up a wave 4. This looks like 1, 2, and this is 3. You can see that if it consolidates here, your next target is 22.3. FCX, the copper stock, we have a swing on, had a wonderful day Friday, popping 348 or 11%. Volume picked up to 31 million and looks like a breakout with a target now of 38 and 43. FLNG in the oil and gas sector, very, very strong chart. I just had to show this to you how remarkable some of the oils are in the midst of bear market. So, you know, if you're in this sector, you weren't hurt at all. And right now I'm looking like 37 and 40 are targets. FNGR, one of the bigger moves I've ever seen percentage-wise, literally gone from 62 cents, folks, to 980, and about 15-fold in about 2 weeks. And then this coil. Obviously, a move over the Thursday, the Wednesday high at 820 is what's going to take this stock to be 10, 12, and 14. In the oil and gas shipping sector, FRO, up against some key resistance in its range, but your target now is 16. For solar, it's been a monster. Just this last July, the stock was 61. On Friday, it hit a new all-time multi-year high, 161. 100-point move. 3.5 months. And quite frankly, it may not be done, although it is at the mid-channel line. It could back and fill in here. Next target's 175. GILD, an amazing move for this biotech stock, Gilead, coming out of a base here. It literally went vertical from 64 to 81. Needs to maybe back and fill, but momentum could carry to 85 first. In the shipping sector, Genco, which has had a 1, 2, 3 wave decline, has now formed some sort of inverse head and shoulders. On Friday, it looks like it broke out. Keep an eye on this one. Your targets are 16, 18. GTII exploded literally from 62 cents to $9. 15-fold increase in 2 weeks. Back and filled, bounced again. If we pull back, it's got a big wedge forming. Be careful with this one. Hudson, if you know, one of our favorites from 2 years ago, continues to be remarkable. From the low in August or September of 2019, 30 cents, folks. They made it up to almost 11. And right now it's challenging the highs. 11.16 was a high. If you get across that level, you might see 13 and 16. Horizon, big move for this biotech. 1, 2, 3, 4, 5 wave decline in base and breakout with a breakaway gap. Last week was stellar. The stock went from a low of 62-ish to a spike high of 79.5 on Friday, right at resistance. So if it follows through, I would look for a next target around 85, 86. You may need to back and fill here, however. IMRA, one of my favorite patterns, coiling base, low volume, breakaway gap with big volume, a beautiful pennant, which we saw and for some reason didn't, probably because it was a $2 stock. But from here, 225 to 512, under 50%, and it looks like a 1, 2, 3, and wave 4 is underway. So let that develop, because wave 5 could take it to 6 or better. IMVT also similar, double top breakout, explosive move, little flag, and then we moved from that level at 860 to 1243. Really nice move, and it looks like it could be higher on momentum. The next target is 17. And BX was a tech trader swing when it broke out right there. It moved up in a nice 1, 2, 3, 4, 5 wave move, and then came down in 5 waves and bounced and reversed. Now flagging. That's awfully good. Let's consider this 1 and 2 and 3 and 4. The 5th wave, 45 is my target. 45. Iridium is coming out of the base and is now back to the 2021 high zone or near it. And a strong rising pattern, ignoring the market, always a good sign. Relative strength's excellent. Mid to high 50s target. ISCC exploded, wedged, and popped, and then pulled back. Test this line, held it, and bounced. Has work to do though. It needs to get above 9.5, 10. Then you're looking at 11.5, 12. MGNX, a swing trade, breaking out of a base on Friday through a double top. Love it. Up $1.14 to 23.5%. Line picked up a little bit. Your targets are 6 3/4 and 8 or more. Look at Model N. MODN has gone from 21 to 38.5. This is a software stock with a great chart and a beautiful bounce off the trend line on Friday. Next target, 40. MRSN, 1, 2, 3, and a long 4, currently wedging, trying to come out of it, or at least it appears so. Popped out to test a high, couldn't get through and backed off. This is what we're looking for. Keep your eye on it. Above 8 1/4, it's boom chakalaka to 10, 12, and 14 potentially. Nanox. Well, if you look at the overall chart, it looks like a little rounding bottom pattern, and it's been in play for 11, 12 months, not 10, 11 months. I thought we broke out here, but we reversed hard and came down with the market. So that's now your resistance. What I look for is a move to 16.5 first target and then 19.5 second target. It does have a big bottom with a platform right there. That's your support around 11. Nutanix tech traded swing after it popped. It ran up and pulled back and then exploded. Looks to me like it's going higher. This may be a takeout. My target 32. OI, wow. Inverse head and shoulders, right-handed extended V, cup and handle, all of those. Breakout there, run up to target and above there, and it's flagging in here. Next target, 16 and 18. Good Momo. OIIM, look at this base. Breakout, tight coil. What is this gonna do? Bears watching, because any move out of this coil, it can explode like it did there. OIIM. Oxy, along with APA, my two favorite oils, and it has been for a year and a half. Look at that move. Can we challenge that high? Next target, low 80s. PACB. Just when it looked like it was going to explode, it pulls back. Then it explodes, and then it backs up again. As long as it doesn't violate 720, I'm good. That's trend line and lateral price support. If it can hold it in here, perhaps I've drawn this wrong. Perhaps that would be your angle of ascent. It looks like this. Next target, a retest of 930, followed by 11. PFB in the oil sector, powerhouse move, long in the tooth, certainly has momentum to get this into the low to mid 50s at least. Pinduoduo, just wanted to show you some of the Chinese stocks rebounding sharply. This had a tail spike low, ran up to resistance. Took it out Friday. Friday it closed right on the 50-day moving average, a little above it, but it was up almost 9% or 493. I got targets of 68 and 72 right now. Impinge, great looking chart. After popping out and coming out of the falling channel here, big breakaway gap. I run up to what looks like a resistance and now consolidating this area. As long as it doesn't take out 104, it was a beautiful reversal from 105 to 112.5 on Friday. Once it takes out 120, I think you're looking at 135.40 or more. PRPH, double bottom, spiked up. It's at resistance. Keep an eye on this one for a move above 13, then your target's 15, 16. RELL, how outstanding is this chart? 4 to 25 in 2 years. Now flagging. Doesn't look done yet. Next target, 27. Rambus. Look at this. Right-handed extended V or cup and handle. Breakout. Where is it now? Highest level on Rambus, 16 years. Based on what I'm seeing, momentum could carry this one to 40. RBP spikes up, rewave corrected pullback. Actually was a falling wedge. Take a look right there. Spiked out of the falling wedge and ran sharply to my target at about 4 3/4. Pull back down, and now it's almost 5. Hit at 522 action on Friday. Momentum could carry this further. My target's 7.5 and 9. Sanmina, one of the strongest electronic component stocks. They really are a semiconductor stock from what I'm hearing. 1, 2, 3, 4, and then 5. Pullback. Wave 3. 4 may be forming. Ultimately, you could see 65.70. Sava, 1, 2, 3, and then this is 4. Now, longer than I wanted to see. The stop on Sava is under 30. Breakout is over 40. The targets are 50 and 60. Simple. SBTX, nice rising channel for this biotech stock. 1, 2, 3, 4, 5, but it's consolidating. It looks like it could extend. Momentum should take this to 7.5. In the copper sector, besides FCX, we have Southern Copper, which came out of a base big time on Friday and jumped 510 or 10%. Volume was the biggest all year. augurs well for a move to high 50s, low 60s. Seed has had a slow, steady pullback on low volume. We saw it go from 1184 back down there 9 on key support short term. It's my belief the stock could make an imminent move, but technically it's pulled back, and it's a little worrisome if it goes much lower than 9. The next support would be 835 and then 790. SGML, one of the strongest lithium stocks out there. You can see the chart. Speaks for itself. Next target, 44. Schlumberger, the oil services sector, very nice chart, but nearing the top of the channel after multiple waves up. Let's call this 1, 2, 3, 4, and 5. So careful. It's already moved from 12 to 53 in the last couple of years. SLS with an explosive move. It literally gone from $1.75 to 5 and pull back to test that breakout point and spike back up again, usually very bullish. Let's look for a gap fill. I think it's target is shot and moving up to 6.5 3/4. Keep an eye on this one next week, and I mean early next week. STNG, how about this for a shipping stock? 11.25 to 53.5, 5-fold increase. Still doesn't look done yet, but it's a big band of resistance above. Talon Educational Group had a massive recovery from a spike low with the tail down to 281, recovered to 569. TERN, pop, flag, rising wedge. You can see if it breaks out here, mid channel target 9, upper channel target 11. TMDX with a big pop on Friday, made a nominal new high and backed off, but it looks like it has momentum. And now I'm looking for mid 70s. TRDM, TRMD, also all services sector stock with a 5-way move. May not have completed it yet, but it's long in the tooth. My target is 33. DWNK, how about Hostess making Twinkies and consumer products? In 2 years has gone from 9 to 28 and is near the top of the channel. A little overbought, but a tremendous relative strength stock. Uber, V bottom with a right-hand extension and a pop before another pullback filled the gap. I would keep a tight stop on this one. I don't want it under 27.5 ideally, because then you can test 26.25 or less. But the key is a move above 30, 31 zone, and this thing could take off. At some point, I think it will. It's a little sloppy in here now. BIST in the oil and gas sector, another wonderful oil chart. Upside momentum, 16. WFRD, another. Target, 50, 52. Wave, a little low price biotech stock with a nice chart. Broke out, we put a swing on it. It got to resistance and back and filled. If it breaks out of here, my target remains 6 and 7.5. Zyme, ZYME, breaking out of a base. This is a tech trader swing. It popped 8.7% on Friday as volume picked up a little bit, but needs more. However, my target now is 9 3/4, 10, 13 or better. And finally, CECE, wonderful week. Breakaway gap Friday of the week before, and then last week went up 3 days, down a day, and a beautiful pop on Friday. This stock does not want to go. This has good momentum. I did warn a pullback might occur from the top of the channel. That happened for 1 day and right back up again. But it may need to back and fill or consolidate in here. So be careful. Next target, 15. That is a look at the longs. I do have some shorts and some new ones to look at, and then we'll finish up today. I also want to review some old shorts because it's amazing what some of them have done. If you look at the line right, when it came down and formed a wedge here, I said I added it to the box of shorts list, although I don't believe I put a tech trader swing on it. Nevertheless, 555 to 175. Pretty amazing, and it doesn't look like it wants to rally anytime soon, does it? Ambarella, head and shoulder top breakdown, bear flag right there. That's where I said this might be a short. 155 down to 48 and a bear flag. AVNT, massive top form, broke down to snap back and then rolled over hard. Rising wedge got creamed. Tagged a support zone at 28. You might see a lower low down around 23. That's my next target. EYX, topping pattern broke here. Stair step its way down. Kept on making lower lows. This is what the angle looks like. And boy, Friday dropping another 420 or 9%. It doesn't augur well for this one because it just broke the double bottom. And at this point, wouldn't be a shocker to see this one go down near the low 30s. BILL, massive top, rollover wedge. Here's the wedge. When you see a wedge form after a stock breaks down, an awful will break down again. It did a 1, 2, 3, 4. And for me, the fifth wave may be underway already, but it has had a mini 5-wave decline. So I don't know how far this can go or will go. Let's just say this. Worst, I think that possibility is mid 60s at some point if it cracks support in this zone right there. Keep an eye on this one. CDNA broke a top from the wedge that was put on the tech trader swing short level at 48, and it's dropped down to 15. After looking like a promising rally occurred again right to the declining tops line, their lateral price resistance got whacked for 271 or 14.5% on Friday. And quite frankly, you might see 13. Coupa, breaks down from the bear wedge, never got up above the resistance, all over there, bear flag, bear wedge, snap back to resistance. Again, you can see in the throes of a nasty decline, very nasty decline. It's been going on for 2 years now, and it just broke down to lower lows. So I'd have to say the possibilities are that at some point, it may test somewhere in the mid-30s. Carvana, probably my best pick ever. When it broke down, and I didn't even get into it until it was 150, but it's dropped down to 8 3/4 in a year. With Friday's low, dropping 559 or 40% in one day, and dropping to the bottom of the wave of the channel right here, a massive 71 million shares. To me, it's a short cover down here. Simple as that. ENTG doesn't get more ugly than that too. Head and shoulder top breakdown, 1, 2, 3, 4, 5 waves down. The problem is many stocks that have been shorts or are looking terrible like this are at the lows of the channel on a fifth wave, but also indicates to me that the market could bottom in the zone. ESTC broke down here from the bear wedge. That's when I put this on the short list, and they just got hammered all the way down until finally it rallied here, but couldn't get through that level of key resistance between these lows and these highs, fell short and rolled over again. Any further damage here, we might see 40 or even less. FIBN, been ugly since it broke down from the bear wedge right there. Rising flag there. Finally found the base, it looked like it was breaking up, then rolled over and got slammed down. At this point, there's some support right about there, but looks like we even got below that. So this is quite ugly and it could fall apart. FERR, same. Massive top breakdown. There's a little bear flag in there. Bear wedge, a bear wedge. Then a rollover and a long. I would think at this point is a falling wedge. Take a look. Falling wedges can snap back, so you got to be careful. But any takeout of 27, 26.5, we could drop into the high teens even. Garmin. Mini head and shoulders breakdown, rising wedge broke down there from the flag. That's where I said this is a short of 140. 140 is 76, and it doesn't look done yet. Although this could be a V bottom with a right hand extension, it might also be nothing more than a rising wedge and a bearish trend. Next target, 70. MDB, head and shoulder top breakdown, snapback. Big snapback, but not able to get the resistance. Then a collapse below support, right to it. And then a rally back that failed again and now getting hammered. This stock has dropped from 571 to 145. And quite frankly, with massive head and shoulders like that, you might see the stock even at 100. MED, from the wedge there that broke down, and then that bear flag is where I said this is a short. It did come down and bounce, but couldn't get to that level, and they kept fading all the way down. And over the last year, it's gone from 225 to 95, and it's pretty ugly in here. Next target, 83. MND wise, the new one I put on, I just noticed this one, but it just broke a triple bottom. That's why I'm thinking it may not be done. I might see something in the high 50s, low 60s. And ET. It's a 1, 2, 3, 4, and the fifth wave is well underway. But you can also see that right now it's at the lows in here that could at least get the mid channel down around low 30s. Overstock continues to fade and look ugly. That was the wedge where I said this is a bear wedge. Then from 55 down to 21, in danger of mid-teens even. PNR breaks down, wedge, 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 flag, just keeps doing that kind of thing. Finally here, it tried to break out, got to the declining top line and moving average faded. It's a bear wedge, folks. Until this breaks out, this could very easily see lower levels. It wouldn't shock me to see mid-30s, 41 last. RHI, we gave you a tech trader swing short at 99. It's dropped down to 65, bounced. Doesn't look good here, but that V bottom could be a platform. Keep an eye on that one. If it breaks down under Friday's lows, it's a short again to 66 and 60. Ring Central, been ugly for a long time now. Last 2 years, you saw this stock go from 449 down to 29. How about that? And do you see a bottom? Frankly, I don't. SITM, head and shoulder top, breakdown right back to the neckline. And then it's a series of highs and lows in this declining channel, finally breaking there, coming down massively from 326 to 72 before bouncing. But I'm not impressed with this bounce. It appears it could be some sort of bear wedge again, so be careful. If it breaks down here, you might be looking down 15, 20 points more. Snow, top tier, probably back to resistance, broke down, and then really started to fall before it finally looked like it was breaking out. Only to roll over once again. Friday was very bad for it, down 18 points or 12%. It said secondary support, your target and next support is 110. SSTK Shutterstock broke down from the bear wedge, another large one. It's basically a 1, 2, 3, 4, and the fifth wave is well underway. As you can see, based on what I'm seeing here, if it breaks here, we're looking at mid-30s. TEAM breaks its support, starts a downtrend. This was a head fake breakout, but it rolled over, and now on a Friday got mashed for $50 for 29%. With that kind of breakdown, breakaway gap, you might see lower lows, but it is at a key support level. It goes back a couple years right there. Tandem also got thrashed Thursday and Friday on that bear wedge I had pointed out at 55, dropping 20 points Thursday and Friday. A little oversold here short term. CREX breaks down, bear wedge, bear flag, another one, still breaking down. Wouldn't be a shocker to me if the stock makes a move down to at least 33, 34. Teletech topped, stair step its way lower, it continues to look lower. And the next target down around 35. Upwork, it's been down since the triple top. Bear flag, rising bear wedge, a larger wedge, and then this steady decline since July when it traded in the 25 range down to 12 and cut in half. Quite frankly, folks, although there is some support around 10 and 3/4, 11, you might see single digits. WRLD, pretty nasty look. Large declining channel. Parallel as well. It's amazing how they do that up and down, isn't it? At the bottom of that channel as well, and a multiple fifth wave down. I'd be careful, this is a fifth of a fifth. ZM looks really bad. I know Zoom is a popular company in stock, but picture tells tells a story. 575 high, 77 last, and that's up. But I mean, if it follows this channel, we could see a stock in the $50 range. And finally, Zscaler topped, came down hard from the wedge, and then a 1, 2, 3, 4, 5 wave decline, followed by a bounce and a massive decline, which resulted in this multi-month channel and resulted in failure there. This rollover this week has been very, very weak. And you can see that it's at some key support that if it breaks, we can see this stock in the low 80s. This could really be a disaster. Another reason why that could take place would be the bottom of the channel on a parallel basis measures at least 90. So keep an eye on Zscaler short here, particularly on any bounces back to 128.32 zone. Folks, that's a exhaustive look at the longs, the shorts, the technicals, the indices, the ETFs, etc. I really want you to keep an eye this week on this one video that tells a story of where this market may be, and it certainly tells a story on individually where stocks are, where they could go. And that's a look ahead and the weekend webinar for this weekend. HB out. Have a great one. We'll talk to you Monday. Enjoy the rest of your weekend. Bye-bye.